Let's bring in Stan Jourdan then as our last panelist. So Stan is here as Executive Director of Positive Money Europe, which he joined 7 years ago now, initially as their international coordinator, and he's been heading it up now after 2 years spent on quantitative easing for people, special campaign they ran, and international movement for monetary reform. And Stan, so you're also an expert on financial policy and making sure that it delivers for people. How do you look at the concept Peter has presented to us today?
Yes, thank you, Sonia, and good afternoon, everyone. It's a good pleasure to be taking part in this webinar. You know, I think from our perspective at Positive Money Europe, and I have to say we also are running a campaign called the ERL Renovation Campaign that exactly talks about how to finance renovation. So I think, you know, this type of proposal is exactly the type of products that we have been thinking that banks should develop since we started our journey into thinking about this issue. So we are completely supporting this proposal. It may not be the only proposal, as Guillaume said. Other types of loans could be developed. I think a particular issue when I've been speaking to people about this, and in my family, for example, about this product, I think what people really feel strongly about is the fact that you would only repay this loan after 30 years. It sounds a bit scary that you kind of kicking the can down the road, and so perhaps early repayments should be facilitated to ensure people are not just forgetting about this loan and passing the problem to their children or something like that, you know. But apart from that, I think this is typically the type of thinking we need to make. As many speakers have said already, we think the banking sector is not up to their job right now in terms of funding the renovation wave. But for us, the critical thing would be the cost. The cost of these loans is critical, and not only the cost, but also the fact that the cost must be stable in the sense that people can foresee what will be the cost of these loans tomorrow. And this is why I think right now what the European Central Bank is doing by raising interest rates is doing more harm than good in that respect, because what they're doing is they're raising the cost of all capital investments, including green investment, including the investment that we need today to tackle the inflationary crisis that is caused by fossil fuel energy that we import from abroad. And as many speakers have said, and as the ECB has recognized themselves, obviously more energy efficiency, more renewables energy that we produce domestically, that would reduce the pressure from inflationary sources. So it's critical that you know, energy efficiency is a critical factor for the success of the European Central Bank's monetary strategy. I would like to insist on that. This idea that the European Central Bank could offer low interest rates is not a pipe dream. I think it's a win-win deal for the banking sector, for consumers, for the planet, also for the ECB, also for monetary policy, for price stability, because currently energy efficiency would be the best response to lower inflation. So that said, I think we've been campaigning actually on this idea for 2 years now, and I'm super pleased that you know, Peter's team has embraced and make this idea be their own. I think that's a very great development for us. And I would emphasize again, this idea has been considered at the ECB. Christine Lagarde is in favor, alongside with a few chief economists of banks. A few months ago, we did a letter to Christine Lagarde. She responded a few weeks later saying she agrees. So what needs to happen next? I think that's a quick question. That from back in the days, I mean, a year ago when the ECB looked at this, they said, "Oh, we cannot do it." One reason was the lack of data. They could not know. They could not know if banks are doing renovation loans or mortgages, or, you know, there's no classification in place. The good news is this is changing. The taxonomy is now adopted. Starting 2024, banks will start reporting on their taxonomy alignment, and renovation loans are clearly identified in the taxonomy. So this is not an excuse anymore for inaction. The second argument the ECB came up with is what I said before, like I think a year and a half ago, maybe this idea was a bit far-fetched. Maybe it was maybe a step too far in the ECB's thinking about greening their policy. And the argument was it's not directly enough connected to our primary mandate. But as I said before, this has changed now. The energy crisis is here, and this is a great reason why the ECB should change tune and reconsider this idea moving forward. But of course, what needs to happen before the ECB can really implement this is that we need to see banks developing these products. We need to see the European Parliament and the Council and the Commission working together on the mortgage portfolio standard, because this is what will bring all the actors to integrate energy efficiency into their model, into their business strategies in a way. And once the entire sector starts moving, it will make sense for the ECB to say, okay, we need to make sure that this goes somewhere, and this is going to scale up. So I think that would be my few points at this stage.